Hi, I'm Adam Anderson, owner of WealthGuard Advisors. Thank you for tuning in.
Hello, I'm Blake Anderson, certified financial planner. Thanks so much for watching.
I just want to remind you that past performance is not a guarantee of future results, and you should read the disclaimers at the end of this video carefully. Hey, Blake, let's talk about the S&P 500.
Yeah, big news of the weekend really is this whole snafu between Powell and Trump's Department of Justice. Trump's saying he's not involved now. He doesn't know what's going on, but we'll see. It did put some fears over the weekend. We were seeing futures were negative on the market, but that hasn't been founded today. The market has been strong. And I think that's a sign that maybe there's more news and fluff than actual substance going on.
Yeah, so just to clarify, Jerome Powell heads our Federal Reserve monetary policies, and there's been a butting of heads in their policy decisions with President Trump. And so he's building this huge, he's remodeling this huge building down on the Potomac in Washington, D.C. It's gone into the billions of dollars. The Department of Justice is looking into potential fraud in this, and he is implemented in that fraud. So what do people do when they're accused of something? They're accusing the party as it's a leverage tool because Trump does want him to lower interest rates. He's been dragging his feet about that. They have different economic policies with one another. So that's what's taking place there. And so there was concerns about how this might affect the markets. But there is an other factor that's affecting the market over the weekend, news that broke. You want to talk about that too?
Yeah, I think perhaps more impactful, if less headline making, is Trump's proposal to cap credit card interest rates at 10%. This would be a pretty big deal for the financial sector more generally, but specifically for those lenders that specialize in credit cards for consumers. A company that we were looking at is Capital One Financial.
Yeah, so it looks like Capital One is down almost 7% right now. It's sitting right at this 200-day moving average. So it's hit support, but I don't know that this is the end. I mean, normally I see something like this and I'm like, I really want to buy this, but I am very hesitant to want to jump onto the what we call catching a falling knife type of trade. You want to add to that, Blake?
Yeah, I'd be concerned about buying it. Really, what will happen here is highly dependent on whether this proposed cap on credit card interest rates actually goes into effect. It is a pretty populous suggestion. Obviously, a lot of consumers, individuals out there would be like, yeah, I'd love to pay less on my credit card debt. But it's not very popular with businesses who have a lot of lobbying power. And so we'll see. There hasn't been a whole lot of clarity from Congress people if they're supporting or against this yet. Obviously, Republicans are in majority right now in the House and Senate. So it's not unlikely that something like this could get passed, but we'll see as it gets massaged over time what actually ends up going on. If it's less restrictive than what Trump proposed over the weekend, obviously we'd see a recovery from here. If it does come into effect, we might have further downside. So we'd like to wait and see in situations like this.
Right. So one of the things that we do just to get inside our heads a little bit about how we look at these is you say use like a 3-day rule on a drop like this. And sometimes you miss the balance because it shoots right up. But most often when it gaps down like this, it doesn't just gap back up right away. It usually has to digest what's going on here. And it may take a little while. So this is something that we will take a wait and see approach. But we still love the financial industry sector. We did, luckily, fortuitously on our part, we did trim our JP Morgan Chase. We have options, long options on that we trimmed, and we also rolled out in time. For those of you that know what options are and how they work, that's taking risk off the table. We also had the XLF, which is the financial index. We also did the same with that, but it wasn't because we expected there to be news from the president that would rock the banks. What we did expect is that we're coming into earnings, and a lot of times there's a lot of volatility around earnings. So we want to have a lot of time to digest that volatility that sometimes comes with earnings, because JP Morgan Chase is earnings later this week, and a lot of the other big banks are coming up. So that's the reason why we did it. But fortuitous for us and for you if you're our clients, that was a way that we took profits off the table before this dropped. So wow, it just dropped another half a point almost from the time we talked. But we do still like the financial sector for a number of reasons. And the main two reasons why we like financials is one is interest rates are coming down, and that's helping their margins on banks and investments. And two is we feel that artificial intelligence is really benefiting the financial industry. So we talk about the picks and shovels of artificial intelligence, the NVIDIAs and software companies that are making artificial intelligence has been such a big story. But we're really looking at the implementation of using artificial intelligence. And we're already seeing that companies having a much more efficiency rate in their companies. It doesn't mean that they're out there laying off people. Some are, I'm sure, but it does mean that their efficiency is going way up. And so we're seeing that across the board. And we're looking for news on that as they do their earnings about how these efficiencies are playing out. So we think that's a ghost story. There is a third one I should mention, and that is mergers and acquisitions. So we are going to see a heat up of mergers and acquisitions more than likely in this coming year, and that helps a lot of these investment banks like Goldman Sachs. But let's take a look at the Chicago Board of Options Exchange, Chicago Board Options Exchange, CBOE. And this is one we're looking at because of volatility, it benefits from that. You want to expand on that a little bit, Blake?
Yeah, so Chicago Board Options Exchange, CBOE Global, what they do is administer the options market, a good portion of it. And so when we have periods of increasing volatility, large companies, even individual investors increasingly will trade options to either hedge against that volatility or try to capitalize on that volatility. And so that increased trading in options leads to higher profits for CBOE. And they've been very strong recently, and it looks like we're coming out of a period of consolidation, breaking into new highs today, potentially, if they close there, and looking very good, optimistic.
Yeah, as far as charts go, we really like this. Here's a little trough here, breaks out, kind of consolidates, makes another trough, and it looks like we're just breaking out into new highs again. So on high volume, this is a company that has a good profitability. So it's one we're looking at and we feel really good about. We still like financials, but maybe not more focused in areas that aren't reliant on lending, especially credit card lending at this point. So just that's an idea for you and gives you an idea of what we do with our clients. Blake, you want to close this up real quick?
Yeah, thanks so much for listening. Just a reminder, WealthGuard Advisors, we're a registered investment advisor, registered directly with the Securities Exchange Commission. And part of that is a fiduciary responsibility to our clients, where we're obligated to act in their best interest. We specialize in personalized asset management and financial planning designed around your unique goals and objectives. We work on a straightforward fee-only basis, no setup fees, no exit fees, just transparent pricing for the services we provide. If that's something you're interested in, would want to learn more, or just have questions for us, we'd love to talk with you. We do free consultations. And so you could reach out to us through our website, and we'd love to talk with you. Thanks so much for listening. We'll see you next time.
Thanks for listening.